This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, June 24th, 2015. Euro dollar. So the euro has come back under some intense pressure into Wednesday after stalling out ahead of some key resistance in recent sessions, ahead of that 1467 resistance going back to the 15th of May. At this point, inability to establish above 1467 will keep the immediate pressure on the downside and the medium-term downtrend intact in favor of what could be a bearish resumption back down towards recent lows that we saw at 108.19, which guard against that 104.62 multi-year 12-year low from earlier this year back in March. Right now, the next key short-term support comes in at 110.50, and we'll look to see if that market can take out that level to keep the pressure on the downside. Again, only back above 14.67 would take the immediate pressure off the downside in this market. Sterling dollar. So cable is stalled out after racing to fresh 2015 highs in recent trade all the way up to 159.30, but the market is now pulled back and could be at risk for deeper setbacks towards previous resistance, which comes in the 155.50 area. A break and close below 155.50 will open the door for an acceleration of declines and more medium-term bearish resumption, while inability to close below 155.50 will keep the structure on a short-term basis quite constructive and leave the door open for the possibility of a retest and break above psychological barriers at 160 further up. Dollar yen. So dollar yen has enjoyed a nice little bounce in recent trade after pulling back following that fresh multi-year high several days back at 125.85. Still, with the market now trading well below that 125.85 level, we could be seeing more of a consolidation than a bullish resumption just yet, and there is still risk for additional weakness towards that previous resistance now turned support, that breakout area at 122 from earlier this year. At this point, any setback should, however, be very well supported in the 122 area ahead of a bullish trend resumption and break back above 125.85. Euro Swiss. So Euro Swiss continues to look like it's in the process of recovering since bottoming out in the 102s, and a break above 105.75 will help to confirm this outlook and accelerate gains back towards the February peak at 108.15 further up. At this point, only a close below 104 would give reason for pause. Aussie dollar. So Aussie remains locked in a well-defined downtrend, with the market mostly consolidating in recent trade. But with the market trading below recent highs at 78.49, the pressure remains on the downside for an eventual retest and break of this year's multi-year low at 75.33, below which exposes psychological barriers at 70 further down. At this point, only a close back above that recent high at 78.49 would compromise the immediate bearish outlook. Dollar CAD. So dollar CAD looks poised for a bullish resumption after basing out several days back just ahead of 119 and now looking like it wants to put in a higher low in the 121.30 area. Look for a break back above recent highs around 125.65 to confirm and accelerate gains towards a retest of the 2015 peak at 128.35 further up. At this point, only back below that recent low that we saw around 121.30 would compromise the immediate bullish outlook. Kiwi dollar. So Kiwi is broken down to yet another multi-year and 2015 low, trading down to just shy of 68 thus far ahead of this latest minor bounce. Daily studies are a little bit oversold now, so we could see a bit of a short-term corrective bounce before the market looks to resume its downtrend and head down towards a measured move objective in the 65 area. But again, any rally should be very well capped around the 70 area with only a break back above 72.32, that high that we saw going back to the 10th of June, negating the immediate bearish outlook. SPX 500. So although we've seen the S&P 500 rally back up in recent trade, the market continues to stall out ahead of that record high that we saw back in May at 21.37. At this point, the structure is still looking quite toppish, and a break back below 2040 would confirm and accelerate declines. So look for the market to stall out again ahead of 21.37. If, however, we see a break and close above 21.37, that will negate the toppish outlook and open the door for fresh upside and fresh record highs in the U.S. equity market. Gold. So gold has seen a pullback in recent trade, though the market has pulled back into some critical internal support in the 1170 area. At this point, a close below 1170 would be required to put the pressure back on the downside and the focus on a retest of the 2014 base at 1131. But inability to close below 1170 keeps a longer-term basing structure intact, with the prospect for a short-term bounce back above recent highs that we saw just over 1200 at the 1206 area and towards towards 1232 further up. Ultimately, a break back above 1232 is what's critical here, and a break above that level will open the door for an acceleration of gains above 1300. Again, only a close below 1170 would compromise the basing outlook for gold.